Well, crew, all I have to say is that this market is turning into a cheap soap opera. Bad acting, overdramatic swings, and the same plot every bloody week. But somehow I'm drawn to it every day. So today we're going to tune into the market soap opera again. Crypto is showing, or Bitcoin is showing some signs of stabilizing right now after the 30% flush that we had. Ethereum is trying to reclaim $3,000 line. We're sitting right at 2,929. Altcoins, most are still in the penalty box, but XRP, man, did that have a nice little rally, huh? XRP was the star of the show. Now, this matters because what's happening right now is that we got the first glimpses of economic data in weeks. The longest shutdown in U.S. history is finally over. And we got the first real piece of macro data the Fed has seen in months, and they're about to make a rate decision basically blind. Yep, they're going to be blind, and we're going to cover all that in the video today. And we got MicroStrategy making moves. Something's up with this dude right here. We're really right back down to almost where he was before he got added to the Russell 1000. So there's a lot of stuff happening. So welcome back, Crypto Crew. It's your boy Tommy. I bring you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And make sure you come on over to X and follow us on X when we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's get right into it. All right, so I want to start off I want to talk about what's going on with the Fed and the data, okay? Let's start with the big micro catalyst because this is going to shape everything under the surface of crypto. So we got the U.S. shutdown that is finally over, right? That's old news, right? We had a data blackout. We had no unemployment data. We had no CPI data. We had no growth prints. We had no official statistics. Markets were literally flying blind, and so is and was the Fed. Now the shutdown's over, and we're finally seeing, I'll tell you, the first new labor market report, right? Updates on unemployment, fresh jobless claims data, but it's not fresh. It's old. It's old jobless claims. So it really was just the first real data dump in weeks, and it's crucial because the Fed meets on December 10th, right? We're coming pretty close to it. So what did the first data show? Well, it showed unemployment ticked up from 4.3 to 4.4. Nothing major there, right? No effect on Bitcoin really as it stands right now. Now we're getting this consolidation that's happening. I'm kind of liking it. I'm glad, so far, the Tuesday dump has been held off right now. This is the first. We had the weekend pump. We haven't had a true dump yet, and it is Wednesday. So that is a good sign. As I just jump all over the place because I got ADHD or whatever they call it, ADD. I don't even know what it is. So job creation came in at 119,000 versus the expected 50. Woo, that's not great for rate cuts, but that's good for the economy, right? We got 70% of that growth that came from two sectors: education and health, and leisure and hospitality. So are more people taking vacations? I don't know. Sounds good too, right? That sounds pretty good. But other sectors remained stagnant or negative. So the initial jobless claims are still low. Current jobless claims slightly ticking higher, meaning that people continuing jobless claims, this is, okay? Meaning that people can't find new jobs easily. Maybe that's the AI component to all this. I don't know. Just throwing it out there. So the overall outlook, it's sluggish, but it's not a collapsing labor market. Now, this is where it gets quite revealing. The Fed is going completely blind into December. All right. They don't have any new data. The October unemployment report is incomplete. And, the October CPI report will never be released. Ooh, okay. The November CPI report is delayed until when? Get this, December 18th, 8 days after the Fed meets. That's why I'm telling you, this thing is turned into a soap opera. I mean, this is insanity. Okay. So, really, right now, you're going to have to trade this thing. You're just going to have to rely on, if you're a fundamental trader, you got nothing really to rely on. You got to rely on technicals. And since I'm a technical trader, I really don't care about any of this stuff. I just care about, what the charts are saying, right? Now, a lot of you guys, oh, well, you missed the big bear move, push down. No, I didn't. No, I didn't. I did start calling it at 106. Okay, I didn't call 116. I didn't call 126. Nobody did. All right. So I'm not being like a whining little person right now. I'm just saying, okay? So meaning the Fed's gonna make its rate decision using data that's basically 3 months old. Okay, let that sink in. Now, odds for a December rate cut have swung, okay, from 95% down into the basement at 35%, back up to 75%, and now the interest rate traders are saying 81% chance. And this all happened in a matter of weeks. So right now we're getting a perfect setup for risk assets, including, of course, crypto, right? And to overreact violently in both directions. Now, I introduced you to yesterday Morgan Stanley Capital International, right? What they said about, MicroStrategy. Now, there's something that's up, all right? I want to get into that right now. I want to look at this right now because look where we are. Look where the stock is right now. All right? It's it's really almost at the same price it was before it did its massive rally up. Now, I know one thing as a technician. If we break that level and we do not get a Wyckoff spring, in other words, we got two levels to look at. We got this deep level right there, which is probably like the most important level. So if we can pop through this low and break these two pivot points, goodbye. Something is up big time. Now, that would be very, very bad for Bitcoin. All right, now let's talk about it right now. Let me get over to that X post that we have up and we can discuss this. Now, just a reminder, okay, this is what Saylor said in response to Morgan Stanley Capital International, okay? He's saying strategy is not a fund, not a trust, not a holding company. We're a publicly traded operating company, a $500 million software business, and unique treasury strategies that use Bitcoin as productive capital. They're saying that's duck feathers, okay? Because the model really is just the flywheel model, okay? And he definitely used it to his advantage, okay? So now the chickens coming home to roost? That's the question. So let's come on over and look at the X post that we got right here. Strategy, okay? 58,390 Bitcoin worth 5.1 billion into Fidelity's omnibus custody. Migrated. Okay. Translation. If they want to unload size, this is how you mask the footprint. So are they preparing? Is he preparing an exit strategy? Is he looking to lock in profits before the stock dumps and before he gets delisted? I don't know. But I'm just saying I've seen this a lot of usually, it's not, when you deal with stocks and stuff, there's usually options that are placed on the stock and the owners if they know the stock's going to dump, they buy the puts, right? So they know, right? Now, this is completely transparent. So, are they preparing? What does Maryland say here? Are they preparing to sell or secure deeper liquidity? I don't know. I would actually go look like they're preparing to sell because of what happened with Morgan Stanley Capital International. Now, of course, like I said, I'm a technical trader, but really this would not be good. So let's talk about this. All right. What is an omnibus system? Well, it mixes multiple client assets with a shared custody pool. Meaning, if you want to unload size, omnibus custody hides the footprint. Absolutely. So the obvious question is now. So here's the two-sided question, right? As a trader, or even as a sane person, if you're looking at this, if you were really gung ho, okay, you wouldn't go into omnibus custody, right? Would you? I mean, if you really wanted to buy, why would you do this? You just buy straight out like you've been doing. So hiding in this, so this is I smell something here, and it doesn't smell good. Okay, something is up now. We got technical levels that we got to look at in Bitcoin. We are at a major, major crossroad. Now, here's the thing. If this company gets delisted, it's just going to be like selling Bitcoin. Now, we could get a major spike down. Where? Well, nobody really knows. But if you do say market geometry on it, like where you take the high, you take the recent high that we have 126, you take it off the 70, you're looking at a $50,000 drop, right? So uh, that puts us into like the $30,000 area. Now, that would be extreme, extreme. Am I saying it's going to do it? No, I'm just doing like some YouTube math in my head, right? I mean, that's basically I saw one guy leave a comment. Tom, it's just like YouTube math. Yeah, sometimes it is YouTube math. It's just like quick off the cuff. This is what I'm seeing. This is how I'm reporting it. Let's just say, okay, now I think it's going to happen? No, that would be extremely unlikely. So where could you go? Other people that are on our channel asked, like, well, how is this priced in yet already? No, it's not priced in yet. There's no way that it's priced in. However, where could you go? I don't know, 50,000, 55,000, maybe. I'm just, again, we're just talking here, right? I'm not saying that that's going to happen. But anyway, so the obvious question is, are they preparing to sell? Are they simply shifting for better liquidity? Better reporting or better institutional relationships? I don't know. I would think it's 60-40 that they're preparing to sell. That's the way I look at it. Now, yesterday we talked about this because we said that Morgan Stanley Capital International, the digital asset treasury proposal is that how institutions may need to rebalance into digital assets aggressively. If that's correct, moves like this, shifting billions into deep custody pools, are exactly what you'd expect. That's why I'm saying I would expect this. So whether they're positioning to sell or positioning to buy, it's an institutional preparation, just like we said yesterday. So he couldn't just go out in the marketplace and sell after that. He couldn't. If he did that, then he would confirm that. Now he comes out, later on X, and he says we're going to get listed on the S&P 500. Oh, come on, man! Like, take it easy. Take one step at a time here. We got to get through what's going on with Morgan Stanley Capital International. That's for sure. So let's get into Bitcoin right now itself. Let's look at what's happening in the structure, the short term, and we'll widen out a little bit to the longer term and like what we're seeing right now in Bitcoin itself. Before I even get into that, let's just look at the total crypto market cap. It's starting to recover. Okay, it's not nowhere near, hey, happy days, let's blow the horn, put the hat on, and bang the pots outside. No, that's not happening right now. But it's starting to recover. That's a good sign right now. Let's move on over to good old Bitcoin itself right here on our 2-hour chart. As I said, this chart's going to become more and more important as we start to move forward. What we're starting to see right now is a good sign, is that we're getting basically a basing that's happening like right in this area right now. Okay, that's pretty good because the massive selling wave has stopped for the time being. I'm not saying it's not coming back, but I'm saying right now the market's digesting because, like I said, this is a cheap soap opera. Nobody really knows what to do in this thing. That's why I suggest you get into a pro group because we take short-term trades, short and long. And I'll tell you how to do that in a second if you want to see how we deploy capital. But anyway, right now as we stand, we're sitting between, say, 85 and 90. Okay, like let's just say that. I mean, I know it's a little bit higher than what the ultimate high has been, but as it stands short term, and we're going to get into this a little bit later. As it stands short term, I would say right now, since we rallied up to what 89,000 something, 89. Come on, 89,228. I would say we have to come down to this pivot point here. 85,295 is now like a short-term support. We got to get through this 89, and then we got a massive resistance right now at 91. So the marketplace is still kind of breathing a little bit, and I'll circle back to that later. But right now, so what's the pain zone? Well, we got Bitcoin that crashed over 30% from the highs, right? So we got multiple billions in forced liquidations. It really wasn't retail panic. It was systematic deleveraging. So now we're stabilizing. So now the battle zone becomes between, let's say, 83, 5 and 89. Let's just say that. So now we got 80,600, the November flush low so far. That's the real important point, right? That's that point right there. 80,006 right there. Very important point. We got 84 right now. Let's say 82. Let's say 82 to 80, 84 right here as basically a demand zone right now. Hasn't shifted. Then we got 90 to 91 that we could actually, if we can get through it, we could actually shake this real bearness off, and then the marketplace is looking at something that we're not seeing right now. And the market's always right, it's never wrong, but then we got 95,000 above it. So today's, it's a calm before the storm. We got low volatility. We've got institutions like, are they accumulating? Some are not. Some are just waiting. And we got retail that's right now is hiding. And I understand them, believe me. It's like right now it's like a war zone. So Bitcoin is right now reacting to a potential for the rate cut odds. They need that sugar high, man. We need that dopamine hit of the rate cut. That's for sure. That would be nice. You got a weaker jobs market, okay? And actually, the Fed has no visibility for this thing. So are they now? Powell's a skunk. Powell's a skunk. Now Trump's got one of his guys in there. He's basically saying that we should have a rate cut, and actually, that's why the market is stabilized. I think it was a New York Fed basically said that there's room for a movement. But so now, basically, what's happening now? Let's go a little bit longer term in Bitcoin, and let's talk about like everything's resting on a line here. The whole soap opera is based on this line, really. Okay, it rejected the line 3 times during the bear market phase. Okay, and then it broke out in 2024. So it's now retesting from the highs. This point is so important. It's the most critical retest of the cycle right now. If we hold it, we can get the bull rally to resume. Now, we got so much against us right now. So much. So that would mean that most likely it's going to happen. I'm just saying, because generally the obvious rarely happens and the unexpected constantly occurs. You could have all this negative. We got, Morgan Stanley Capital International. You got strategy basically on its heels right now. You got everything that is against this, and it's holding right now. Bitcoin is holding. So what is up? So something is up. Because if it was a true, like we need to get out right now, everybody would be selling this thing. This thing would be down at 68,000 already, maybe potentially lower. But we got to hold the line. If we lose the line, the structure is going to collapse. And I said it, we can hold it. We can get up, the bull rally starts to slowly resume again. Now, Bitcoin, now if we look, okay, now you're going to go a little bit deeper. We're going to look at, where's my other chart here? Here we go, right here. Bitcoin repeated the same trap. A few times it's done this. We have everybody that's panicking. I'm not even, like retail panics, okay, everybody panics here and there, right? The price dipped 15 to 20%. Bitcoin longs just hit a major resistance. But every time this happened, the bull market resumed. Now, we got to, like I said, I'm always weary of it's different this time because, but we got the big players involved in this thing, and we need to look at IBIT again. Where's my IBIT chart right here? Let's check out what IBIT is doing. This is a good sign too. IBIT's held the $46 level. It's right now 49.51. It needs to clear 50, which would be good. It needs to hold the base. It needs to definitely hold this low right now. If we break through this low, we're cascading lower, which means Bitcoin's taking another dump down. Now, Also, MicroStrategy is exactly Bitcoin, so they're going to react just like Bitcoin reacts. Bitcoin will be the first to move. MicroStrategy will follow shortly, or like in tandem with it right now. So really, we need to get above, say, 50, 51. We need to hold 50. If we get hold 50, that's a good sign. We're starting to get like the big boys, BlackRock, starting to say, maybe I'm not getting the lower levels that I want, so I'm going to start to accumulate now so I could sell to my clients, right? So, as we said, Bitcoin basically repeated this trap, and we got to see if it plays out. That's why I say you need to get into our pro group, and we'll help you trade it. All right, so every time this happened, right, in the past, the bulls got their revenge, and is it going to happen again? We'll see. Only time will tell, right? If we can get through 91, then through 95, we got a shot of it really happening again. Now, this environment really historically favors high beta assets, meaning Bitcoin tends to lead before the stock market even figures out what's happening. So Bitcoin's going to be the canary in the coal mine for tech stocks, right? So, and I was hoping that we would completely decouple, and well, hope is not a strategy. It has not happened yet. Old systems die hard. All right, let's go on to good old Ethereum. What's happening in Ethereum? We check out this Ethereum chart right here. We got Ethereum basically sitting at critical levels. 2000 is, the deeper retracement level right there that it needs to hold, obviously. Right now, Ethereum's doing the classic Ethereum thing. It's really quietly strong under everybody's nose right now. It's sitting really. It's I've been saying it the last couple of videos. It's been holding incredibly, considering what happened with Bitcoin. It did not dump. That gave me some idea that something's up. This was a complete utter manipulation. And it's still going on, right? So we're sitting right now, Ethereum 2,930. Support right now, short-term support sits at 2,800. Resistance is 3,000 right now. So shorts wiped, 25 million was liquidated in 48 hours, meaning people leaned short at the wrong time. And I think that, they're not paying attention. Now, we talked about this, all right? It's the Ethereum Bitcoin broke the trend. Bitcoin dominance topped out so far at like 59.5%. It's a classic reversal zone. So let's come on. I want to show you this because this is quite interesting. We brought this chart up before. Okay. Now, why am I bringing it up again? Because we have a post out about this. That's why you got to follow us on X, man. Like we have a post. I think it's this one. Is that the one? No, that's XRP. That's basically XRP post. But where's this other post? Right here. Okay. Tether tokenized over $2 billion worth of gold on Ethereum. Institutions want non-fiat protection and on-chain liquidity. It's on top of Ethereum. Okay, so now I'm going back to my good old Ethereum gold, right? And this is what we said the other day. Now, this is huge news again, and the market's not really reacting to it yet. So if we just look at these charts, we're basically saying Ethereum's repeating gold's move. Now, isn't that interesting? Same 4-year range, same failed breakout, same shakeout into support. Gold rallied 142% after this exact move. Now, Ethereum just hit the same inflection point. If history repeats, Ethereum's going to rocket, man. Now, Tom Lee's out there saying it's going to 9,000 by January. All right, that might be a little bit irrationally exuberant, but I'll take a break above 5,500. That would be nice. So now, if we look at it again, Ethereum tends to move after Bitcoin shakeout, not before. So this is a structural textbook, but the emotion is the opposite right now. So right now we are in a classic reversal zone. So if we look at Ethereum, like I say, like a wave theory, right? Wave 1 kicked off the cycle. Wave 2 is shaking out the weak hands, right? That's happening. Wave 3 is where the parabolic moves start to form. The pattern printed 3 times before. Each time Ethereum went vertically higher. Now it's flashing again. So you gotta stay awake with Ethereum. You have to. Okay, now you got to position wisely. Okay, you can't just go bet the farm because you could get one more final shakeout or a couple of more final shakeouts. We don't know. I mean, but right now it's looking pretty good. That so far the 2000 is holding. You know, if we can get above 3,500, we're in good shape with Ethereum. So you got to pick your points of battle. You just got to be prepared for it. And I again, come on in to our pro group. I'll show you in the description how you can get involved with that because uh, it's important. If you get a couple of minds to bounce ideas off of. All right. So now let's get over to Bitcoin dominance. All right. Let's check out Bitcoin dominance. This is an important chart that we got for you guys. Now, XRP ran the roost, man. XRP really, really moved nicely. Now it's sitting at $2.17, but yeah, what a move it had. Now, if we look at the total altcoin market cap, all right, oops, can't move that. That's got to be like right there. Bitcoin dominance still sits right around what, 50, like 8.5? Yeah, 58.65, something like that. So right now we're starting to see alt season index like is still 23. It's far from rotation, right? Total 3 is basing. It's not breaking out. Only isolated coins are pumping. Specific sector pops. So this is positioning season. It's not rotation season yet. Now look, if you're a retail trader, you're a middle manager guy, you got a job and a family, the worst thing you can do here is chase volatility. All right, just don't. This is a watch list season. It's not, YOLO season. That's for sure. Okay, now, if we look at altcoins versus Bitcoin itself, we got the reversal point. Bitcoin just lost trend support, right? Yes. Okay. Total 3 held the macro uptrend. This marked the breakout of 2021. Okay. Now the signal just flashed again. So altcoins are next in line. Now you got to pick the right utility coins. Okay, you got to pick the right utility coins. All right, let's circle back. Earlier we talked about the shutdown and the data finally coming out. Let's get a little bit deeper just so we have the important notes. But before we do that, let me show you how to get into this pro group I keep talking about. Come right over here. Oh my goodness, what is this thing? Sign in. Hang on, let me fix this. I don't know what's up with this. Okay, so here's how you do it. This is so annoying, right? I mean, they make me put my password in. Who remembers their password when it has to be like 16 characters long with all like these different symbols in there? Who can remember that? So finally you put the password in. All right, great. Now you know what it does? Check your phone. Check my phone. My phone is somewhere else. It's in the other side of the office, buried under papers. I don't even know where my phone is. Oh my gosh. But anyway, here's how you get in. You click the link right there. You'll be taken over to our pro trading community where it's completely free to join. We drop insane alpha trading opportunities every day. All right. If you want to go it alone, we offer 2 outstanding brokers to work with. WeX, low fees, fast execution. BTCC, low fees, fast execution. Through our links, you get outstanding bonuses. WeX, no fees for life. BTCC, $500 token giveaway. You got a small account, $1,000 to trade with. You get 50% increase right there. But I highly suggest that you actually come over and join our pro group because we offer insane trading opportunities every day. All right, so let's get right back into it. So we got what's going on with Bitcoin. All right, let's just finish up right here. We have the shutdown ending. We got data drip begins. September unemployment report. Unemployment 4.3 to 4.4%. Payrolls 119 versus 50,000 expected. Sector concentration. Claims data trends actually continuing, claims rising. October report is missing key parts. October CPI is never coming. Fed rate odds are whipsawing back and forth. The Fed forced to make a policy decision based on really stale data. We got a Powell warning saying probably not going to happen. We got one other Fed governor saying, yeah, there's room for a rate cut. So we got, risk assets tracking rate cut odds tick for tick right now. That's what's happening. So Bitcoin really doesn't care if the data is good or bad. It cares about liquidity. That's the most important thing. And right now, the entire global macro system is setting up for the next liquidity wave. We actually have like Canada ready to start adding liquidity soon too. So Bitcoin itself, support, let's say 82 to 84,000 is like the area right now. They're buying it. The pivot point is at 88,000. A bull trigger is above 91, but you got to be careful with it because that's the resistance zone. Breakouts are, sometimes really just liquidity sweeps false. But generally, if you can get above that point, you could look for a dip to buy. Okay. Bull trigger, like, okay, is above 95,000, right? So right now, we're not even near that. Break 80,600, we got a deep flush. Ethereum range, 2650, 2800 support. Break of 3,000 leads us up to like 3,002, 3,003 maybe. But we got to watch that 2,800, really important. A trend flip is a daily close above 3,300. So altcoins, there's no broad rotation yet. Watch for the Bitcoin breakdown below 55. The dominance below 55. Total 3 breakout needs confirmation. So again, if you want to follow us with our trades, come on into our pro group there. All right. So as it stands right now, what do you have to do? Well, you definitely got to follow us on X. You definitely have to do your own research. As you know, I am a trader. I am not a financial advisor. What else you have to do? You got to trade with your head not over it. You got to think about joining our pro group because we'll help you out. And we'd love to see you in there. The more the merrier. And also, as a short-term trader, you got to enjoy the party, but dance near the door. Cheers.